Hello, everybody. Welcome to Thursday. The S&P 500 was down almost 0.3% today. I kind of had a up and down all week this week, but staying kind of in that zero point 0.4, 0.5, 0.3% range. And overall up for the week. This market was down a little bit more today. Some of the dip buyers came in and brought it back up, towards the end of the day. And one of the things that I keep reading about is this bubble. There's a bubble. You got a lot of people running around talking about that. I think a couple things that are important about that, first of all, is number one, is when everybody starts talking about something, it often doesn't happen, which is kind of fascinating. So, the fear is that the market is completely overpriced, which it very likely is. But one of the things that does happen in these types of environments is that valuations start to become sort of a secondary consideration, if that, for the investors in this type of market. It's got momentum. The market keeps on going. It does usually mean that there's a bigger pullback at the end. But, if you go up 30% and then it drops, at least you've gained, before it dropped. If you look back at the Great Depression, it dropped 87%, but it had a huge run up before it fell. So it's kind of like that, and in 2000, we had, this big move. And so when you get people starting to talk about, hey, it's too high, it can go a lot higher. I tell you, I remember Alan Greenspan talking about in 1996, the stock market that was going on there. 95 to 2000 was the best 5 years in history of the stock market. And he talked about what was called irrational exuberance. The S&P 500 doubled from that comment before it finally topped out. And the NASDAQ did way better than that. So, we had a couple weeks ago, we had Chairman Powell talking about the market being, fairly highly valued and what have you, as far as that goes. And so there's some interesting correlations there, but things can go for a while. It doesn't mean that they'll stay up there forever. I actually really prefer a market that's moving along at a steady pace where you don't end up with these bigger pullbacks. But the excitement around the money that's being spent to build out these AI data centers is really overwhelming all the other aspects. Combine that, I guess, with the potential rate cuts that are coming here. Seems, looking at the Fed minutes, that the two rate cuts are a little bit controversial within the group as a whole, but that's overall kind of where they ended up at. There's a lot of bifurcation. I would say for sure we'll have a rate cut here in October, and we'll see what happens in December. But nonetheless, not a bad day to be in the market today. We're not going to do a show tomorrow, but I will be doing the summary, which I'll for the week, which I'll send out also. So look forward to talking to you then. Thank you very much.